So let's get today's show started here on Channels Television. This is your Business Morning, Thursday, the 28th of June. I am Boston Amafaye. It's great to have everyone here to spend the next 1 hour together. What do we have on the show today? We're looking at the new 85-page document from Vetiva Capital Management, one of the investment and securities trading firm, looking at the second half of 2018, which we're stepping into on Monday, July the 2nd, and with the critical issues around the global economy, the Nigerian economy, which they say will be a little bit dimmer in the second half, and of course the marketplace, looking at critical sectors of the market: consumers, industrial goods, banking and agriculture. But talking about agri, this report says there will be consequences for the increasing deadly clash between herders and farmers in Nigeria's food basket, mid-belt, and all the way to the northeastern part of the country. We're looking at those two reports with two of Vetiva Capital Management folks joining us here. The chief economist, Michael Famaruti, will be here to give us the macroeconomic background to this 100-page document. And later on the program at 10:30, Olalekan Labode, who is the head of research, will bring in the market into the conversation and what are the fundamentals that you need to look at if you're trading the market in the second half of 2018. You don't want to miss the next 1 hour of this very incisive conversation. Somewhere in between at 10:15, we're bringing the world of agri-commodities into the conversation, what the Nigerian authority is doing in agriculture and why this is very important in moving the economy forward. Look at the current agro prices as well that are beginning to tick as we get into the second half of the year. So we're counting down the end of first half, and we're looking at what are the big stories, what you need to focus on for the second half of 2018. But of course, it's a busy day in Lagos and in Abuja today, tomorrow, to wrap up the month. What do we expect today? The Lord Mayor of London is hosting Nigeria-UK bilateral conference at about this time in Lagos with the Trade Minister, Enelama, and that is one big story we're following for you. Meantime, at the end of this, after lunchtime, the closing bell on the Nigerian Stock Exchange, the Lord Mayor of London will close our Thursday trading day at the Stock Exchange, 2:30. In the afternoon. Then, as we speak, you have the Nigerian Bar Association's Business Law section holding a key plenary discuss today in Abuja on the roadmap for Nigeria under the new Africa Continental Free Trade Agreement. That's the AFCFTA. That is another story we're following for you on our calendar. And also in Abuja this morning, about this time as well, the first colloquium of Nigeria's Professor of Capital Markets, Uche Uwaleke, that is focusing on fiscal and monetary policies for deepening the capital market in Nigeria. This is the first colloquium. Professor Uwaleke is Nigeria's first indigenously produced Professor of Capital Markets, and that's just about a month or two ago. Now he's appeared here on Business Morning to speak about his professorship in the capital markets. Now he's holding his first colloquium to bring attention on how we need to deepen the capital market using fiscal and monetary policies. These are some of the stories that we need to focus on as we move on with today's program. Of course, we're expecting Michael to join us in the next few minutes here to have these very important conversations around the marketplace. Of course, the background of that is the economy. But first, let's take a quick check on the Nigerian market, where we finished off in the red for the second day in the week on Wednesday, 0.06%. The market still below the 38,000 on the all-share index. The equity cap fell slightly lower, but was still well below the 14 trillion threshold. In terms of volume, we went down on Wednesday. The market was down about 31% in terms of volume for the trading day. In naira value, 3.17 billion naira. In deals, we're less than a Tuesday transaction of about 4,000 units with 4,000 deals. That was 3,800. For you there on Wednesday to do the midweek. Then, of course, you look at how the key 5 sectors of the market went sideways. Industrial goods kept their green shirt about 1%. Consumer goods was down about 0.2%. The banks lost about 0.6%. Insurance went down about 1%, and oil and gas gave a bit of a small green shoot, 0.30%. That's just looking at the stock market for you. 2:30. You see the Lord Mayor of London doing the closing bell on the Nigerian Stock Exchange. So let's look at this. Vetiva's latest report, 85-page document, quite extensive on the marketplace, and of course the background to that is the economy. Michael Famaruti is here to flag this conversation up for us. Good morning, good to have you.
Morning, pleasure.
Sorry, we understand a bit of a vehicular traffic on our own highway because there's another accident. Is that us?
Yeah,
which is another container. I think about 20 or 40-footer container that is down there on there because of the potholes. If you're going all the way out of Lagos and you're going that major road, we talk about every day, Lagos-Ibadan highway, one of the most naughty and intractable problem for us here on Channels Television, because that's where we're located, really. So it's just right in front of us, and this morning it's all the way down into the city because we had another accident there, and that's brought Michael a little bit late into the studios.
Yeah.
Yeah, thank you. So we're going to fix this. We have to fix this problem. Infrastructure. So if we start with that, this is a very small problem here. That's beginning to cause major upset for business and economy.
Yeah, it is. I mean, the positive I feel is in the last 2 or 3 years, this government has sort of based their fiscal policy on infrastructure. So I recall the world's richest man, Bill Gates, he came earlier in the year, and he actually said that Nigeria perhaps should invest more in its people in terms of healthcare, education, as opposed to the current stance of trying to build up the roads and the rail and the power and so on. So the positive, I guess, is that there has been spending in that area. These things do take time. There's a significant time lag, and it just requires a bit of patience and keeping them accountable. Yeah,
yes, we need patience. But again, if you take the Bill Gates statements and what have you to the market, and you got a new report, Nigeria is now the new poverty capital of the world. Does that speak to what Bill Gates spoke about? Because we've seen growth over the last we've seen growth to at least the end of 2015 in terms of our GDP. But in terms of this trickling down to the man on the street, to the people, in terms of whatever you're spending money on, you need to grow. You need to hold the man on the street by the hand on one hand. He needs to feed, he needs to clothe, you need to create jobs, he needs to have the basic necessities while you are doing the massive capital spending. There's a big disconnect here. What does this report say from your firm, just still hot, less than 24 hours, about where we're going, where we're heading in 2018, second half? And your report says the outlook dims slightly in the second half.
Yeah, unfortunately, the outlook is dimmer. Coming into the year, we expected really that the oil sector and perhaps a bit of a boost from the election spending would lift the economy a lot. So far this year, we have seen improvements in the oil sector from prices, but also from production volumes. In the last month or so, though, we have also seen some disruptions to pipelines in the Niger Delta, and that has already begun to impact volumes, and that is part of why we've dampened our own view of the second half of the year. But as well as that, you know, we've seen a lot more in terms of the effects of the violence in the middle belt and the impact that is having on food prices and food supply.
We'll come to that. We have very short time, but we've got to conclude it. This is the first paragraph or the first sentence of your report on the executive summary. The Nigerian economy did not fare as well as expected in the first half of 2018. Q1 GDP 2.0% year-on-year against your forecast at Vetiva and consensus forecast of 3.4%. So we're dismally below consensus estimate and your own forecast as well. So if you take that and you lap that up with the second half, that's where you came up with the dimmer.
Yeah.
Right.
Yeah.
So exactly. Now you're just explaining how the key issues around the Niger Delta, the cost of insecurity into agriculture, into the broader economy, into industrialization, even the entire infrastructure we're talking about.
Yeah, precisely. So if you look at the major laggards in the first quarter of the year, agriculture was definitely there because the sector grew at its lowest pace for about 5 years, and that's worrying because we know that that sector has been the one that has really driven growth in the last 2 years. So, and we also began to see in May as well some pressure on food prices. Now, if you look at the situation right now, it doesn't look like it's going to go or cool down anytime soon. So that again is what informs our demand outlook for the second half of the year.
Yeah, we're still on the cost of insecurity and all that. And this is you outlined that here in your report, and you're talking about why this is very important, and this is still part of the executive summary. You said particularly as it may be reflecting the negative impact of escalating violence
Yeah.
in the Middle Belt region.
Yeah.
How much dent do you think this would do, not just to agriculture? Do you have some numbers?
Well, so one of the frustrating facets of the crisis, perhaps less frustrating actually, obviously, because there are a lot of lives being lost and a lot of livelihoods as well. But there's also very little data around it, partly because it is constantly evolving, but partly because we as a country have never really applied ourselves to gather data around these issues. So it's actually quite difficult to estimate the level of effect it is going to have on the economy, but clearly the signs have already started pointing downwards, particularly, like I said, in terms of food prices, but also in terms of agricultural output from that region.
So if agric didn't do so well in the first quarter of the year, if we try to extrapolate into second half, where do you think we'll be?
Well, so even as agriculture struggled, we saw a bit of a silver lining in the manufacturing sector, which in the last 3 years had been really punished by the FX situation. Obviously, from mid last year, that has largely been resolved, and the sector has started to perform quite well, and it grew by about 5% or so in the first quarter. The unfortunate thing is that it's a relatively small part of the economy, about 10%. So it really boils down to how sectors like agriculture and services especially, so banks, ICT, trade, real estate, construction, it is really how those sectors do, because they employ about 70-80% of the economy as well. So it really comes down to how well those guys do, and generally it's not really a positive picture, at least for the rest of 2018.
Let's talk about the spendings and the borrowings that we have moving forward. Whatever we look at for the second half, the current budget is one major story in the play, and you put out in this report as well that the ERGP seems to be looks like a supply side policy document rather than the demand side.
Yeah. So, I mean, there's been a lot of discussion about the budget, really, the increase in the size, the delay to the budget. But I think the reality is that it all comes down to execution. It doesn't matter whether it's a 5 trillion or 10 trillion budget. The issue is how much is actually spent. And by and large, over our history, we haven't particularly executed budget well. So I'll put our rough performance, at least for the last 5 years, somewhere around 70%. So coming in already, we know that, okay, the 9 trillion is probably not going to be spent. The interesting dynamic naturally comes from the fact it's a pre-election year, and there's a lot more pressure internally, but also from the constituents to spend and spend well. And again, we hope to see some aggregate demand boost coming from pre-election spending.
I think so. I think there's a little bit of more demand in food, consumer goods when election is around, because it looks like a lot of liquidity in the system, and folks tend to, enjoy a bit of it while it lasts. That's what you call election spending.
Yeah.
Thank you, Michael. And we appreciate that. And well, of course, let's apologize on behalf of the government for the delay in vehicular traffic getting you here into the studios this morning. That's the chief economist at Vetiva Capital Management. Olalekan Olabode is coming in at 10:30 to brush this up a lot for us on the economy. What are the fundamentals to look out for? What are the valuations you need to keep in mind? What stocks and sectors you need to put some, well, bets on if you're trying to use the key numbers and analysis, both technical and fundamental, including sentiment, to buy into the various market segments in the second half of 2018. We're trying to put some flesh into this 85-page report. If there's any to put any more flesh on 85 pages, that's quite a lot. We'll be right back in 2.